right buttons. Okay, welcome to the Growth Capital Conference 96. And well, I'm doing this too fast. Slow down. We have done this before, and we're going to do it again on May 1st. I'll probably say that a few times. This should stop going. I think it's going without me. Uh, we had our 25th anniversary last year, 25 years of doing this. And some of you asked about what we can send to David. And it's a silver anniversary. So I think a silver clad Rolex watch or some silver jewelry, if those of you that missed the gifts last year. But that'll be good for a 25-year anniversary. And we're starting our next 25 years. Here's David Newman. He's the managing director of Newman Capital. So he does some things outside the conference as well as being co-chair of this conference. And I've been on both sides of the entrepreneurial capital source equation. My contact list does, in fact, number 50,000. Some of those are in the Harvard Business School network, but we've also got about 10,000 alumni from these conferences, capital sources, CEOs, marketing executives, and a surprising number of US and foreign government leaders. The list in Saudi Arabia, I think, is about 300 people. It has one woman, and almost all of them are government executives or head of major companies. So that I have access to those people with just a little email. And that's a powerful list, and we use it sometimes. Gene Massey is here. You'll be hearing from him all day, the chairman of Media Shares, and he's going to moderate the conference. He's an expert in crowdfunding and crowd finance. He's written papers on that and on the Jobs Act. He licenses his technology to some other brokers. He is an internet marketing specialist, and he's owned and operated his own video company. He was 7 years with Eli Callaway. Some of you may have heard of Callaway Golf or Callaway Wines. And in that guise, he did 400 television commercials promoting the Big Bertha golf club. And the sales increased in that time from 21 million to 843 million. So, Gene, you've got a fantastic record, and you're going to help some of our people. Mike Donahue is a co-chair. He's an investment banker, the president of Columbia Capital Securities and Advisors. He's former president of the LA Venture Association, at which time, where is he? At which time they used to have meetings down at the Bonaventure, the big round hotel downtown, and he would put 1,000 people in their main ballroom to watch the conference live, and the second 1,000 went into another subsidiary ballroom watching it on video. So Mike did, in fact, for several years, have 2,000 people at his conference. So he knows everybody in the money business, not just in California, but across the country. And he was with the SEC at one point as a division in the Division of Enforcement in Washington and Division of Corporate Finance in Washington. And he was at the branch chief of enforcement in Los Angeles. So when he's working on your deal, he knows the SEC side, he knows a lot of the people, and he knows how to help you deal. Mike's sweet spot is 5 to 50 million, and he's done some deals. You look at his tombstones, he has one deal on there where he's raised 70 million for a venture capital firm. So he has tremendous possibilities. Mike will not be with us today. He's tending to his house in the Palisades fire area. Fortunately, his house did not burn, but he's got to take care of some things today. But he'll be talking to some of our deals that are looking for some big money. Dr. Kathleen Vincent is general manager of the Institute, and these are some of the sponsors that are listed here that she has worked with. These sponsors are a great source of our deal flow, and they sort of underlie the whole structure of the Growth Capital Institute. She's worked on this thing with me for 25 years, and she's also open to some investment and to some gifts for the silver anniversary. You can send her some female type things, and she'll be happy to thank you for that. But we're still working on sponsor development. And you see a lot of those sponsors on our website, the Growth Capital Conference. Amy Wood is not here with us today from Pepperdine, Most Fundable Companies, but we'll be publicizing that program. They're starting their 2025 program, and they will have several thousand people that will apply. I think the cutoff is 10 million in sales. You can go. We'll be publicizing some of that probably starting in about a month or so. And in about around September of 2025, they'll have the final meeting on the campus at Pepperdine with about 25, 30 people there waiting to hear who won the prizes. And that's a fantastic event. We actually have some of those people from time to time on our conference. And it's a great source of information. You should go, even if you're not going to be a fundable, get in touch with that conference, because it's a great source of leads for young companies, and it's a great source for young companies to get the notoriety. And what I think they're in their 7th year, and they're doing a fantastic job. not just in Pepperdine over in the area there in Malibu, but really across the country. Fantastic job. And Amy will be with us on a future deal, and we're going to publicize her stuff as we go forward. So now let's talk about the capital sources checklist. This incidentally is some material which we have written up in terms of summary. And if you want some of these documents, just send a quick note, one sentence, say, send me the documents to david@gcc2000.org. And you can go on our website and go on the place where it says send a note and say, you can go on there and say, send me the documents, just give us your email and we'll do that. Here's the first one that we go through. And as I say, we've got this documented in more space, and I'll go through it quickly. The capital sources checklist that we're going to be dealing with today with these sources will be angels, venture capitalists, and an investment banker, particularly in the form of Mike Donahue. And we also have listed these are sources based on the debt rather than equity, and some of the things that get investment. Stan Marcus is a master in this. He's one of our 11 or one of our 15 groups, and he deals with all of these kinds of investment situations where you can finance on these things. Here's a group of sources that are not often thought of, the SBIRs, the SBA, and SBDCs. Let's talk about the first one here, the DoD. Most of the federal agencies have programs to provide grants, and I think you might see some of that here today. And some of the people that had not yet got grants were going to help to possibly do that. The nice thing about these grants, and this is actually a part of our website, the nice thing about the grants is that you don't pay them back. They're not a loan, and they help you get you started. The other thing they do is give you an endorsement. Companies that have grants from a major federal agency are very attractive to the investment community, to the VCs and to the angel groups, because they've been endorsed by a major source of possibly funding. In addition to the grants, sometimes these people have contracts with these federal agencies. So here's some more stuff from our website. The small business investment situation is fantastic. They again will give you grants, but they also give you some support. Here's another part of our website. The SBA again is a fantastic source because they will give you help, and they might even give you some money. And if they give you an SBA a loan, you will have to pay that back. But the advice on marketing and promotion and your investment is all free, and they do a fantastic job. Here's another source of funding. These are two of my favorites. Customers and suppliers are fantastic. The customers can give you deposits, angel money, purchase order financing, which again, Stan Marcus will handle for you. If you get a purchase order from a big company that has grade A credit and it's better than yours, you can finance that. Product development, they'll help you with, and they might even buy you. That's the exit thing. Customers are a great source of eventually buying you out. Suppliers also are a great source of capital. They can give you terms, they can give you angel investment. They might even do a joint venture. You might have similar customers. And again, they might eventually buy you. They might be a source of exit. So these are two of my favorites. Don't forget these. And sometimes you'll see some of these examples, I think, on our presentations today in terms of sources of capital. So that's our list. Again, it's on the capital sources checklist, which I'll be happy to send you, david@gcc2000.org. Send me a note. And that's the list. David's Big Eight. We also have a copy of this. This is a kind of an outline for what you'll see in terms of some of the presentations here today. And when we're doing our counseling and helping put these presentations together, this is a sort of a broad outline. You'll see it kind of followed by the 6 deals today, not exactly completely, but in theory, but in general, we'll mostly. The first thing obviously you're going to start with, and you'll find this in all the deals, why are you in business? What's the pain or what's the market that you're after? And of course, then the lot on product and service. This is where the main thing that people are going to be interested in because they love their product and service. And typically the presentations have a lot on this and frankly, too much for the investors because what the investors are interested in are the next 2 things. Customers. If you have customers, man, fly that flag. If you don't, then you'd better have a key plan that the investors will believe to go get the customers. And you'll see some great traction in our deals today. And in some cases, very early stage, but some very good negotiations. We call that the pipeline. We haven't got them yet, but we're going after them and we're in pretty good shape. So that's a key part of what the investors are after. The other part is the management success. You actually see this on some of the management teams. One of the things I advised on, if you got people on your team that have made money for investors, make that the first line on their biography. And you'll see that in some of the management teams documents that we have and that we're sending out to the investors. So management success is fantastic. When we're doing these programs live, a lot of times somebody on our investor panel would say the following: we invest more in the jockey than we do in the horse. Meaning what they're looking at is not just the product and the customers, they're looking at the biography and success of the management team. So if you've got a great management team and if you've made money for investors, fly that flag. How we make money, a good way to do this is with a very simple example of a specific case rather than, you obviously need the 5-year financials, but a good example of just one customer and what you're doing with them and what the numbers are is a great way. We buy these shoes from China for $5 and we sell them for 50. That's a great little chart right there. 5-year financials, of course, we send out some, you find some good presentations of that. The best thing to do, the two numbers that people look for in the 5-year financials are the following. One, how much money are you going to lose in the first year? Because that's their risk. And then secondly, how much sales are you going to have in the 5th year? Because that's what you aspire to. You'll find that these kind of 5-year financials in some of our deals today. In fact, I think maybe in all of them. Ask for the money. These people will be asking for the investments, and there are some cases they'll give the terms, and they'll be talking about previous investments, many times by the founders or friends and family or angels. The investments profiles of these 6 companies today are quite impressive. In some cases, they've gone into a lot of the history, and the more success you've had in raising money, the more attractive you are to future investors. So put that investment history in there as well as what you're looking for today. And if you have any information on it, tell us how you're going to get this company out. One of the first questions that investors ask for when they come into a deal is, how am I going to get out of this deal? What's the exit? And you'll find some good information on that from some of our investors. Sometimes the exit chart in some of these presentations are just outstanding. I'm thinking of one in particular. You see which one you like the best. Well, there's one fantastic chart on exit, which shows about 6 companies that got fantastic exit, and this is going to be the 7th one. Watch for that chart. Zingers, these are things that if they're true, you can put in your presentation. We have a great customer pipeline. We have recurring revenue. We have multiple revenue sources. So we have more than one way to skin the game. Those all have to do with our sales. We made big money for previous investors. As I said, if that's true, put it in there. We have smart investors. If you've got a very complicated deal that I can hardly understand, but you've got people like, for example, in a healthcare deal, Mayo Clinic and Cedars-Sinai are invested, that's going to give me some confidence. Buyer contacted us. This is magic. If it's really true that somebody has contacted you, you didn't go chasing them, but they actually contacted you, that is magic. That will get you some investors lining up. So there's David's Big 8 and the Zingers. And now we're going to talk about the deal displays. We have 6 magic companies here, and I'll say a little bit more about them later. They're going to be in this order, and they all have fantastic possibilities, and some of them are doing very well already in the marketplace. Our capital sources panel is outstanding. You'll find this listed on our website under the agenda tab, and we're adding to this actually somewhat over the next few months. Mike Donahue, I talked about already. He's from the investment banking field. Greg Cullen with the Harvard Investment Group has made millions of dollars in the real estate space, but he also invests now mostly in other things. He does 50,000 to maybe multi-millions out of his own bank account. Dave DeChapel will be with us from the TCA Venture Group from Pasadena Angels, and he's also chair of the entire group. TCA Venture Group has put together Pasadena Angels, Tech Coast Angels, another angel firm in Florida, and I think they must represent now not just 400, which was what the membership of TCA was, but I think it's probably getting close to 800 people that are angel investors. Fantastic group. Dave will be
howdy, everybody. I'm just saying hi. Hi, David. Thanks for the introduction.
Hi, there you go. Yeah, David, we got you back. I said that you're going to be looking at some other deals, so we're good to have you here, and you're going to comment on one of them, but you'll be looking at all of them. I think virtually all of them have some possibility of angel investment, so we're going to be sending you some of that good stuff. Mark Deschanel will be here from Swiss Financiers, and Gene, I think he's going to comment on one of our deals, right? Mark is always hard to track down. I think last time he was in Istanbul, and I believe he's in Geneva maybe this time. Mark has taken the prize. He brought the biggest deal we ever had to our
Mark is here too. Mark is here.
Hi, Mark. Hi, Mark.
Hi. How are you doing?
He actually brought a deal to our stage to develop 5 islands in the Caribbean, and the price tag on that was $5 billion. B as in boy, billion. We didn't have much to do with that. He was just showing off because of a good deal, but he can do that kind of stuff. So Mark, we'd love to have you here, and I'm going to hear you comment on one of our deals. Fantastic. David Friedman from Tech Coast Angel Venture Group. He's the outgoing chairman, and Dave Chappell is the current chairman. David can't be with us today, but he'll be with us for sure next time on May 1st. And he's part of the consortium that deals with all these angel oriented deals, and we'll be sending stuff to him, even though he's not going to be with us today. Jay Goss from Wavemaker 360 Health, as the name implies, is an expert in that space. Wavemaker is one of the granddaddy of venture capital firms in California, and they represent a tremendous amount of money. Jay Goss merged his firm with them now, and they're a very powerful source of healthcare financing. Richard Greenberg is an expert in film financing, and he's now got some video companies. He put together about 750 million on some major films that you'll recognize, and they're in his biography. So we're glad to have him on the team. Brian McMahon from Expert Dojo I got him lined up to comment on one of our deals. He can't be with us today, but I'm going to send him one of them specifically. We've talked about it. He has literally hundreds of people that they act as accelerators, and he does some very special kind of investing. He invests in firms almost before they exist. He invests in some very early stage companies, taking great risk, and he invests across the world, not just across the United States, but across the world. His money goes into some firms in Africa and in the Middle East and so forth. So we're very glad to have him on the team. And I've got him slated, as I said, to comment on one of our deals, although he will not be with us today. Stan Marcus from Capital Business West is an expert in debt financing. And he has done, let's see, I'm looking at his numbers. He has done about 2.5 billion in financing, about 425 different deals. So if you got anything based on your purchase order financing or any kind of financing of working capital and so forth, Stan is your guy. He knows everybody in the business, and he can put them together with you. Gene Massey's here from Media Shares. You'll hear him several times, and he's going to comment actually on the first deal. Joanne Miller from SLO Seed Ventures is a fantastic leader in the area of early stage investment. She was greatly responsible for bringing Golden Seeds to California, and she knows everybody in that space, including the headquarters people. So we're very glad to have her with us. She's been with us for a couple of decades. And Stan Tomsic is here representing Pasadena Angels of Clean Tech Open. Stan is going to comment on one of the deals, and he's a great advisor as well as investor to these deals and has been on the team again for many years. So that's our team of people, and I've saved it in one of these. I haven't mentioned Golden Seeds with Adriana because they've joined us fairly recently, but they've been very, very powerful. And as I say, Adriana is commenting on a couple of deals today. I'll give you a little quick synopsis. We had a deal that she commented on a couple of shows ago, and following the comment, she had them give a presentation. Whoops, let me put that back. She had a presentation in the Silicon Valley group. She got them together with some of the individual investors there. And then she had them do a presentation to the national group of over 300 women. And then she introduced them to some people in the same space that were not competitive, but possibly joint development and joint selling. All this happened within 30 days after the presentation. Now, with all due respect to the other 14 groups, nobody else moves that fast. So Adriana, we're glad to have you come back today and comment on the two deals today. So that's our conference. The next one is going to be on May 1st. And we'd like to have you, if you're going to sign up for that, do it by about February 15th. We haven't got our website changed over to this date yet, so don't do it today. Wait until mid-February. Right after Valentine's Day would be a good time, and we'll look forward to working with you. That's our Growth Capital Conference for today. Now we're going to have, and Amy Wood is not here, so we're going to ship stuff up. And Mike Donahue is not going to comment, but I can see a few words in his place maybe at the end of the meeting. Now here's our 6 deals. You're going to find 6 fantastic deals. The glider deal, which is the first one commented on by Gene Massey, has a foot controller for games, the kind of things you play on your website or your phone, and is a fantastic product. Quadvantage has a surgical instrument for quadriceps tendons. They're FDA cleared. They're already in market, and Stan Tomsic will be commenting on them. GSM Diagnostics is going to keep your pets, your cats and your dogs healthy. They're doing testing kits, working with veterinarians, And Dave DeChapel is with us from Techos Angel Venture Network, and he'll be commenting on them. Nomi Brew has a deal to put coffee and coffee machines into hotel rooms. She's working with some of the major hotels, and I will give you a testimonial. And that coffee stuff is just delicious. You gave me some beans, and they are fantastic. So you got some good stuff there. Bondi Bourne will be with us coming in a little bit later because she's actually in Australia today, and it's a little early there. But she'll be talking about their product, which is designed swimwear using luxury fabrics. A fantastic thing, and her pictures are, frankly, as a male chauvinist, let me tell you, her presentation is the prettiest of all of them. And she's got traction in the United States all over the country. She's got a chart showing the country with dots everywhere. Now, fortunately, the Golden Seeds people have investors all across the United States. So that's a good match. And Adriana from Golden Seeds will be commenting on that deal. Permian Petroleum is with us as the final deal. And Mark is going to comment on that. It has oil producing wells. And we're looking forward to some of that. I actually use some of that petroleum most of the time, about every week or so. I actually put some of that in my Corvette. So I'm very pleased to have them with us today. Let's see, we got, there's Gene Massey is going to be taking over, and there he goes.
And David, if you can stop sharing. There we go. Okay. Now we're going to hear from Peter next, but let me make a request of Mark Deschanel. Mark, they had scheduled me to comment on Peter's deal, the glider deal. And I wondered if you could comment on it also, because you're a real big investor and very prestigious. It would be great if you could comment on this first deal
Sure.
that's next. Okay.
Anything you want.
That would be great. And also if you can stay up late, we have a deal with Andy Westmoreland from Permian Petroleum. If you could comment on his deal, which would be about 11:20 or something like that.
No, it's no problem. I'm in Florida, so no issue.
Okay, great. All right. So then, Peter, if you would join us and share your screen, that would be great. And I can begin your timer whenever you're completely ready. Just let me know when you want me to start.
Can everybody see my screen?
We see your screen, and I can go ahead and start you.
That's excellent. Thank you. Hi, I'm Peter Bartnick. I'm co-founder and CEO of Glider here in Dallas. Modern games ask too much of our hands, with paddles, extra buttons, and rows of hotkeys being added to devices all the time. But all those buttons don't necessarily lead to greater control or reduced hand or wrist strain in long gaming sessions. Not sliding here. So let me introduce you to Glider. Glider is a foot-controlled device designed to improve performance, reduce strain, and bring more fun to your games. Glider's bipedal design is the first of its kind in the digital world. It can be programmed with up to 16 different combinations to add to existing control schemes. It's endlessly configurable with easy-to-use software, connects via USB or Bluetooth, and is compatible right out of the box with all of your PC games. Glider's gaming enhanced, whether it's crouching or peeking around corners in a first-person shooter, or moving a game to the couch for more comfort during a long gaming session. Glider also works with all of your PC games out of the box because it emulates keyboard, mouse, and gamepad. You can do with keyboard, mouse, or gamepad, you can do with Glider. We're stepping into a huge and growing market. There's 1.8 billion gamers worldwide on PC platform alone. The gaming accessories market for PC gaming is $12 billion. We're really targeting UK, US, and EU gamers between the ages of 16 and 34. And our initial focus is just here in the US for active streamers and people playing a variety of genres of games. We ran a Kickstarter back in February last year. We raised over $83,000 from over 440 backers. And a good statistics from that was 80% of our backers were new Kickstarter participants. Our go-to-market plan is pretty straightforward. We're going to sell Glider for $299. They'll cost us somewhere between $75 and $80, and we make gross margins of over 70%. We're going to be targeting adult PC gamers and disabled gamers, and we're going to be using a variety of marketing channels and influencers to help to reach them. We're not planning on building a lot of gliders in our first full year, only about 3,500, but as you can see from the projections, we know there's demand there for ramping that up very rapidly in 2026, over 25,000 units, and over 350,000 units in 2028. We've got a great team. My background's in building consumer products and devices and enterprise software. Rick Tett, the inventor of Glider, has over 15 patents to his name. And John Warren's a media and games specialist. He was previously the editor-in-chief for Tencent's Fanbyte magazine. We've got some great advisors as well. Adam Reimer, former CEO of Optic Gaming. Jordan Rees, who was the founder and CEO of Astro Gaming, which sold to Logitech, and Jinwan Lee, who's an expert in consumer products and manufacturing. We've got 7 issued patents, 2 here in the US, China, Japan, Korea. We've just been given the go-ahead for Europe, so that's France, Germany, UK, and Switzerland, and we've got additional patents in filing. We're raising $1.5 million pre-seed on a safe note at an $8.5 million pre-money valuation. We've already received $100,000, and that was from a product developer ex-Logitech, so we're very pleased to have that. And we're going to be using those funds for completing our development software and services, for inventory and working capital, and delivery and support. We'll be building our first 1,000 gliders here in Dallas, and we're expecting those plastics here in a couple of weeks. So that's Glider. Let me know if you have any questions. Thank you.
I'm going to let Mark comment first, Peter, and then I'll have a couple of comments myself.
Yes. So first of all, I think the product has a great potential. It's obvious, and it's probably attract, and it's probably going to be a big success. However, I have 2 restrictions. The first restriction is that we are looking at a poorly structured deal, because a safe is not for that kind of money, nor for that kind of company. So my first reaction would be to what you say is basically stop being greedy and transform your safe into straight equity, because there's no reason to do a safe under those conditions, and even less a note. Second part of my comment would be we are looking at a mono product company, and my experience is that while it goes up, but when it goes down brutally. So what you should do is basically raise more money than you do and immediately organize a product range which will give you stability, where you're not having the whole company depending on the curve of just one product.
Good comments. Thank you.
Please.
Yeah, that's an excellent. We've got 3 minutes left here. Peter, my question would be the 100K is that 100K in revenues in 2024 from selling these?
No, we raised 83,000 on the Kickstarter in 2024. We don't have product yet. We'll expect product in April of this year. We're taking orders, but we haven't announced that on the site as yet.
Okay. Now,
so the 100,000 was $100,000 investment on our safe for our pre-seed raising.
Okay, so you raised $100,000, and the people that gave you that $100,000, had they tried the product?
The person who tried it out has tried the product, yes, and he's a product manager for Logitech. So he's a very informed industry participant.
Okay.
We previously raised 140,000 on a friends and family round. The founders have tipped in about 55,000, and we've added another 20 from winning a variety of pitch competitions.
Okay. So the advisors that are on your thing, have they tried the product?
Yes, they have.
Okay. And so did you do any kind of marketing study with people that play games? Any kind of broad studies to see any comments from abroad?
Yeah, we have. We've done a variety of questionnaires, gone out to people that have been added to our mailing list, and particularly to our backers from the Kickstarter. There was a group of 440 odd backers in that group, and we have questioned them pretty significantly. They fall into a variety of camps. A lot of people want to use it for general computing, for spreadsheets, for video and audio editing, because Glider is an analog device. It's not just a series of buttons. And we've also had enormous support from the disabled community, people with upper limb disabilities that need to have something that's easy to work with and can allow them to use their computers for long periods.
So technically it could take the place of a trackpad and a mouse. In other words, you could kind of move the mouse, the cursor with your feet.
That's correct. Whatever you can do with a keyboard, mouse, or gamepad, you can replicate in Glider.
Okay, that'd be a good slide for your information, because that expands it to not just games, but you could actually use your feet to control your computer on a day-to-day basis. And that would expand the product line beyond games, I would think. But am I correct in that?
That's correct, yes.
Oh, well, you should definitely mention that it's basically it's a foot-controlled cursor, or almost. And yes, it's good for games, but it could be good for other things too. And that gives you an expanded line. So that's all I have to say. I go back to Mark, and Mark, he's got another 30 seconds if you have any final comment.
I would say that your last line was a very, very good suggestion that I didn't think about, and they should definitely dive into it and look for it, research it.
Yeah, I would think. Okay, well, we're on time. And what this means is that we go to the next person if we get Peter to stop sharing. And by the way, Peter, these like we said before, these presentations will go out to the entire group of investors. So everybody that will have a chance to see what you're doing.
That's great, thank you.
And if you can, there's the time. Okay, and so we can go to the next presentation, which is Quad Advantage with Tom Gutierrez, and you're going to have I forgot who's doing your presentation, but there's somebody here watching. I think it's Tom. I think it's Tom.
Stan Tomczyk.
Yeah, Stan Tomczyk. That's right. So when you're ready, Tom, I will start your timer.
Can everybody see my slides okay?
We do. We see it great.
Outstanding. Technology is wonderful stuff. You can go ahead and start.
Okay, you're started.
All right. Well, good morning, and I appreciate everybody taking the time to listen to our Quadvantage story. My partner, Dr. Paul Burrows, a well-respected orthopedic surgeon in the Raleigh-Durham area in North Carolina, and I founded this company in 2018. Our focus was on improving or dealing with the issues that Dr. Burrows was seeing day in and day out as he completed ACL reconstruction surgeries in his practice in North Carolina. The ACL is one of the key ligaments in your knee. And if you follow sports, you know that ACL tears are just the bane of professional athletes, destroying careers and in some cases really damaging the length of the careers. What you may not realize is that ACL injuries are quite common outside of professional sports. In fact, globally in 2025, it's expected that 2.5 million ACL reconstruction surgeries are done. Over 1 million of those are in the US and Europe, which is the market that we will be going after initially. Now, ACL tears don't heal, and there are no synthetics that can replace an ACL. It's a rather tough duty that an ACL actually has to do. So nobody's been able to develop a synthetic replacement. And when you damage your ACL, it has to be removed and replaced if you want to regain the function in your knee that you normally have. Typically, a tendon is taken from another part of the body, another part of the knee, actually, or from a cadaver. The patella and hamstring tendons are common sources of replacement grafts. Each choice has its own unique set of issues. The patella tendon procedure, which is shown off to the right, that shows that they take a piece of your patella tendon between your knee and down to your tibia, leaves the larger scar, is very, very painful, and frequently comes with long-term kneeling pain and ongoing pain issues. And so there are significant issues associated with that surgery. So in some cases, what they do is they take 2 of your 3 hamstrings. Now, those hamstrings have a function and they don't grow back. And so what typically happens there, although that's less painful than the patella tendon surgery, you end up with a weakened joint because the hamstrings aren't there anymore. And then lastly, there's cadaver grafts. Cadaver grafts have to be highly irradiated in order to remove any issues associated with the possibility of transmission of disease coming from the cadaver. And they're quite weak, and they tend to fail much sooner than the other surgeries do. The point is, these surgeries are really costly, very painful, and can cause long-term issues that will continue to create problems for the patient that has these surgeries. And so Dr. Burrows was driven to look for a way to help his patients end up with a better outcome. Now, there is a better solution, and the quadriceps tendon, which as this picture shows, comes from your quad, which is just underneath your thigh, the muscle the tendon that grows in that area. It's a much stronger tendon. It grows back after you remove it, and so it doesn't have some of the issues that the others do. However, the things that make the quad tendon really a good potential replacement for your ACL also make it incredibly difficult to get to. It's in a hard place to get to without having to make a secondary incision up on your thigh. And even then, that's pretty difficult. And because it's tough, it's incredibly hard to cut. And so what's happened is, although, and I hate to say this about the healthcare community, in spite of the fact that there's a better solution, it's so hard surgically that surgeons have tended to ignore it and continue to do these other surgeries. And so we set out to resolve all of the issues that I've talked about, and we believe that we have, in fact, with the product that I'm going to describe to you shortly, solve some of those issues. We've developed a set of surgical instruments, but just as important, we've developed a set of patented technique, a method technique. So we've got about 5 patents issued, 3 pending, but the method technique is probably the most powerful of them all, that blocks anybody from doing what we're doing to make getting that quad easily. And because of our ability to allow the surgeon to get to the quad, they're able to deliver a much less painful, higher surgical precision, and a much stronger graft at a lower cost than the other surgeries that I've talked about. Now, there's 2 versions of our Quadvantage autograft system, which is how we refer to it. And I've talked about the patent protection that we have. One version is all stainless steel, which is the version on the left. And these instruments allow you to, through a very small incision, get at the quad, take a small piece of the bone at the upper hemisphere of the knee, and be able to extract it without having a second incision up on the upper part of the thigh. Now, this system is reusable. It's intended to be used, cleaned, sterilized, and then used again. Now, the other set off to the right is a disposable set. And the disposable set is designed, same instruments, essentially, but they're made out of a type of plastic that allows them to be thrown away at the end of each surgery. Now, the business projections that I'm going to show you
Got 3
in both
minutes
cases.
left, Tom.
Pardon?
You got 3 minutes left.
Yes. The other version of the autograft system is basically their throwaway is really popular in the U.S., but in Europe they tend to use the replaceable instruments. Our products are market ready. We've completed over 100 surgeries, no big expensive clinical trials coming. We're FDA cleared, and we started to build our distribution network. We've got a strong management and advisory and supply chain team in place. Myself, I've got 30 years of CEO experience running public companies on all three exchanges, or both exchanges in the US, Tokyo Stock Exchange and whatever. And so not a rookie at this. And our organization is structured to avoid fixed cost. I hate brick and mortar. I don't like high capital expenditures. And so we outsource our manufacturing, and we've built a structure here with some good, strong partners that allows us to do quite well. Our projections are based on single-digit market shares in the U.S. and European markets. This is a 30% EBITDA margin business. We expect to get to $10 million a year in EBITDA within the first 4 years. And multiples in this segment are generally in the range of higher than 10x EBITDA exit multiples. We've invested about $4 million in the business. Dr. Burrows and I have personally invested about $2.5 million out of the $4 million that have been spent to date. We're looking to raise an additional $750,000 to fund marketing, sales, and inventory build. We do not expect to need significant financing beyond this point, as the business doesn't burn a lot of cash on brick and mortar and fixed costs, as I noted earlier. I'm open on the structure on that $750,000, prefer equity. We don't expect there to be any significant fundraising beyond this point. As I noted earlier, our plan is to exit via sale to one of the strategic players. And as you can see from this list, the top 6, 4 of them don't have a solution. One of them has a poor solution. J&J has talked to us. We've had extensive conversations with them. We recently signed up one of their distributors to cover 4 states as a test. Zimmer Biomet has approached us, and Stryker has approached us. And we're currently negotiating a distribution deal with a second-tier player that will be non-exclusive, so that we can, at some future point, turn that into a potential exit. I'd like to end the presentation really by saying that
your whole 10 minutes has been used up, Tom. Now,
okay.
Stan,
Sorry.
I'll give you a minute or two to comment. You guys are going to have to do it offline now. He used up his whole 10 minutes.
Sorry about that.
Okay, real quick. First off, very interesting. 2 days ago, I had a meniscus tear replaced or repaired in my knee. Wasn't the ACL. Not as involved as your presentation entails. However, I can certainly see that if I'd had an ACL and came to this presentation today and saw yours, I might feel slighted. But you have a great story. You need to get to your solution quicker in your presentation, however. You have a great story, though, certainly for further conversation and all, but in the presentation, you need to be a little bit faster. I mean, less painful, stronger, less cost. Terrific. You're doing some great stuff. as far as moving forward. It's obvious you're running lean and contracting a lot. That needs some further investigation of your partners and all. I love the first sentence of your bio. As return hundreds of millions to investors over a career. That's certainly a big plus. You're doing some of the right stuff as far as getting your patents granted, developing patent procedures as far as surgical instruments and things of that type, investigating your marketplace and all very, very thoroughly, surgeries and all to show placement, limited competition, probably because the problem is so complex that as far as the solutions you've come up with. So that's very good positioning for both getting into the market and also for the exit. Very impressive that you have 2.4 million invested by your founders. Don't see that very often. With additional after that, didn't see, but heard you say that this is an equity raise, or that you're just totally open at this point for discussion.
I'm open for discussion. Equity would be fine with me. At this stage in the game, as I said, we don't have a lot of follow-on funding to go get. And so we can be pretty reasonable and easy to deal with.
Yeah, I certainly do like to hear that, not to expect, additional funding necessary. A lot of times we get smashed down in other raises coming out. How much do you have left in your bank right now?
We probably have 100 grand or thereabouts, but we don't burn any money, really.
Well, lastly, what is like your run rate, and do you have revenue flowing now, or is that coming this year?
That's coming this year. It's very minor. We've probably had sales of about $50,000 to $70,000 or thereabouts in the last 12 months, but it's been very limited, just word of mouth.
Okay.
Thank you, Stan.
Eugene.
Yeah, great. Very good. Tom, your presentation would be good for doctors because because you explain it very well. And the material that you show, the graphics and everything would help any doctor's group. This type of offering would do very well with a group of doctors because they understand it. Everybody has a sweet spot. Investors all have a sweet spot, and doctors, if they understand something and can see the benefit there, that's where your market for investors is, I think, in addition to Stan and other people here. Anyway,
Yep.
If you could stop sharing, and we need to go on to Edgar. And Edgar, if you can, once Tom stops sharing, if you could put up your presentation. There's Ed, starting screen sharing. And then Ed, you'll actually need to say something too in order for you to.
Yeah, can you hear me now?
Now we can. Yes, we can.
Perfect.
I see your screen and I hear you fine. Do you want me to start your timer?
Yes, please.
Okay, we're going.
Hi, my name is Ed Golick. I'm the founder and CEO of QSM Diagnostics, and we're reimagining pet healthcare. So the problem we're addressing are the 125 million pet parents that are worried about the health of their fur babies. So in the United States, there's nearly 200 million cats and dogs across that, and that's mostly because cat owners own more than one cat at a time. And traditional diagnostic options just do not meet the demands of this growing population. So in terms of a dollar amount, this results in a $17 billion opportunity. And this slide comes from IDEX, which is a market leader from their investor day a few months ago. And they've been around for 40 years. And according to their calculations and their veterinarians' calculations, they're barely getting to about 25% of the market. So 75%, $12 billion of testing isn't being done today that should be getting done for cats and dogs because of medical advice, but the options just don't exist. That's where our solution comes in. So we offer the Fetch DX mail-in testing kit. And we sell this through the veterinarians. They sell it to the pet parents. The pet parents collect the sample at home, mail it to our lab in Boston overnight. We do all the analysis and results go back to the veterinarian and the pet owner. And this provides a lot of peace of mind and convenience for the pet owner and efficiency without losing any revenue for the veterinary clinics. So we have an entire line that's now on the market. We started selling these in 2022 with an ear cytology test. And we started there because we actually have IP for how to do better microbiology and testing in the clinic, in the laboratories. So we have patents issued around when those samples come in, we can turn around these things faster and cheaper than any other laboratory. We saw that the veterinarians and pet owners like that. We've expanded out to offer dog and cat urinalysis, fecal tests, wounds, and now we're getting into wellness tests to be able to just check on your cat and dog's kidneys health, are they diabetic, things like that. And we also have patents pending around the sample collection process to make it as seamless as possible for pet parents to get the sample as stress-free as possible for the parent, for the cats and dogs as well. So everything in this industry goes through animal health distributors. So in 2024, we've been very successful. We're now carried by the 4 major national animal health distribution companies. They have us in their warehouses. Every product, medication, consumable, disposable that a vet clinic purchases, they get from one of these distributors. And they then sell these products to the pet owners. Today, we have about 100 doctors that are using our products across 3 veterinary groups. And so we just kind of started. I'm actually at the Heartland meeting right now selling to their 300 vet clinics to bring our products in. And there's about 40,000 veterinarians that are independents, but they're very inefficient to sell to. We don't want to go into 15,000 clinics. The most efficient way is to sell to corporate groups that have between 50 and 1,000 veterinary clinics under their control. So companies like Banfield, Thrive, VCA, NVA. And so you convince the ownership that this is the way forward, and it gets placed into all those clinics. And we're actively negotiating with a few of those already. So we're not the only people selling mail-in tests in the market. Our competitors are other startups like Affordable Pet Labs, My Simple Pet Lab, but they're taking a different approach. They're selling directly to the pet parents online through Amazon. They're going into stores like Target, but nobody knows that these products exist there. They're going to spend a ton on marketing, and the veterinarians aren't going to trust the results at all. So because here we have that partnership, we're preferred. Those other startups also have no R&D protection. So anyone else can set up a lab and do what they do, but they can't do it as fast or as cheap as we can. Now, the big companies like IDEXX and Zoetis, Antech, those are the historical reference labs. They have a completely different business model. They sell subscriptions and services. They don't sell any physical products, so they don't use distributors, and they don't ever touch or talk to the pet parent. Most people have no idea what these companies are or what they do outside of the veterinary world. And so we're really positioned uniquely to get the best of both worlds to succeed. So myself, I'm a world's expert on actually developing new types of diagnostic tests and have 10 of my own patents issued out there. I founded the company, helping me talk to the corporate groups out there is our Chief Veterinary Officer, Amy Bowman. She's worked at companies like Banfield in the past and PetIQ. And then we have a team of scientists that actually work in our lab in Boston that process every sample that comes in from all of these pet parents. And we build the test kits ourselves and ship them out. So the whole operation is very lean, a lot of automation. So we have a lot of capacity to grow with what we have. And really our board of directors is where all of the successful exits have come from. They believe in us. They've invested since 2020. Joe Gentili's had 7 successful exits in the life science and technology space. We have a number of angel groups and now funds that have come in the second round. Yep,
6 minutes.
almost done. And so they help support us and their investors personally. Last year, we did $250,000 in revenue. Like I said, we were just getting started. We've brought on those distributors. Now we're getting ready to launch partnerships with one of these big corporate groups. That's going to put us into a few hundred more clinics. That's going to get us this 1.5 million in revenue this year. That pilot goes well, and we expand out to 1,000 clinics. That's how you get the 10 million in 2026. We'll be profitable. Every test that we sell, every kit is already profitable with a 50 to 60% gross margin. I personally invested $100,000 in the company. I don't have millions yet. This is my first startup. But since 2020, we've raised $5.1 million to get to where we're at, building everything out. We're raising $3 million. We're using a convertible note. Happy to negotiate with groups out there around that, but it's going to go towards sales and marketing. We need technical and implementation of that and build awareness with these veterinarians to build this out. Our exit's going to be to one of the big testing labs or one of the PE-backed corporate groups in the veterinary space. We're already talking with the strategic that hopefully we'll announce the partnership in a few months. And that's likely going to turn into a potential acquirer. In this space, it's usually an 8x annual revenue. These are a couple examples from the last 2 years of diagnostics and testing companies being acquired by bigger players. I think we'll exit around 2028, but it could be sooner if it takes off and they really give us a good opportunity, and our board and investors will make that decision. So thank you.
That's it. You got 2 minutes left, Dave.
Thanks, Edgar. Good presentation. Actually, you came to the right group because we have been investors in Basepaws, and it was a 12x exit for us at Pasadena Angels. So we're quite familiar with this market, and we were, as investors, we were in early on Basepaws and quite happy. So, just briefly, if you can keep your answers short, because I know I only have my 2 minutes. What is different about you from Basepaws?
So they do a genetic test. You do it once per the lifetime. We actually test for acute diseases and issues. So if does my cat have a UTI?
Okay.
Is it developing kidney disease? You need to check regularly for wellness tests or as needed. And the doctor actually prescribes a medication based on our results immediately.
So Basepaws is for more serious stuff, and you're more for maintenance stuff. Is that a good way to put it?
Well, so they do like a cancer screen. Your cat's going to get cancer in 5 to 10 years. You should take advantage of it. You have a UTI with us. You need an antibiotic tomorrow. Now you know the doctor knows what to prescribe.
Okay, great. I saw briefly you have an $8 million. The offering is an $8 million cap. How much is the raise amount? I missed that.
$3 million.
And have you started raising, or is that just the beginning of this round?
These are the same terms we raised on in 2023. So we raised $2.5 million at that time. Looking to continue, but happy to negotiate new terms.
But once you hit 3 million, is the round done, or could the round be expanded?
It can keep going. We'd actually prefer to do a price round, but we haven't been able to find anyone that's willing to come in and lead and do the diligence around it. We're talking to a couple groups right now, so that might end up doing that. So there's an opportunity for the groups to work with us and figure it out. We'd love to actually get a little bit more cash in and grow even faster.
All right. Well, I mean, is that that's a pre-revenue amount, right? Or is that post-revenue?
Pre-money. So it'd be 12 post. 3
million at an 11 million post at only 240,000 of revenue. That's kind of, that's a good deal for you guys, but that might be a little out of the range. But I know you said it's kind of negotiable. So
thank you, gentlemen. We'll continue this offline because we are over
I've got
on our
more questions, but I'll email you, Edgar, I guess, some of those questions.
one timing. We're over on the whole shows here, so we got to stick to our time. I'm so sorry. Edgar, if you could stop sharing, and we will go to Naomi now. And Naomi will be commenting on by Adriana. And Naomi, if you could say something so that you'll make yourself appear on screen.
Yeah. Yes, I'm here. Hi. Do you see my screen?
Yes, we do. We see you and the screen.
Great.
And Adriana is listening and ready to, you're ready to start. Let me know when I can start your timer.
I'm ready.
And by the way, we do need you to do 7 minutes if you want 3 minutes of comments, because we are sticking to it.
Okay.
Thank you. And I'm starting your timer now.
How many of you are excited to wake up to your cup of Keurig coffee in the morning? I've asked that same question to hundreds of people in the last few years, and I can tell you firsthand that not many people do. Because of that, I've invented a single-serve coffee machine. My goal is to make single-serve coffee better for you and for the environment. Hi, my name is Naomi Masden, and I'm founder of Nomi Brew. I've spent the last 3.5 years bringing this idea to life, and we're currently on our 4th working prototype going into manufacturing later this year. We've already sold nearly $60,000 worth of pre-orders and in talks with boutique hotels that would generate $6 million next year. This is our 2nd round of funding. Why are we starting with boutique hotels? So they lack good coffee solutions. We've heard this multiple times from both owners and operators. There's no sustainable in-room coffee options, and the bean to cup competition is expensive. So our machine solves these issues. So it's perfectly made coffee with a bean to cup system. We're following stringent brewing guidelines. It's sustainable with no pod waste. It's easy to use for both hotel guests and staff. And then our machine and coffee packets are priced competitively for hotels. So we can actually match what they're currently paying. How it works is easy. So all you do is you put beans in the hopper. It's that top portion. It's whole beans. You put a number 2 filter, choose your cup size, and hit go. It's that easy. There's a large untapped market for exceptional hotel coffee. Hotels are aware that they need to have a better guest experience. This allows hotels to meet sustainability standards they're required to meet every year. And it's a cost-effective upgrade. So they're getting better quality coffee at the same cost. This is a very large market size, starting with hospitality. So this will generate, or the US hospitality industry generates $200 billion annually. The global hotel coffee market is estimated to be worth billions, and the hotel food and beverage contributes 25 to 30% of total hotel revenue, and coffee is one of the most in-demand offerings. We're currently in talks with Hilton, so I met with Hilton Corporate last week. Curator Hotel and Resorts, they're located in DC. I met with them in November, and they're part of our pilot projects. Valencia Hotels, they're interested in putting this all 7 of their Texas hotels. And this week I'm securing a $300,000 letter of intent from a Hilton property. How we make money is 3 different ways. We're mostly focused on the hotel guest room. So we are looking for a 3-year contract, which is what hotels are used to. They get the machine at no cost in exchange for the whole bean packets, and that'll allow us to generate a 40% margin. In addition, we're asking for all their hotel coffee. So the hotel restaurant, catering, and banquet, and that'll allow us a 50% margin. And then lastly, if the hotel does not want to sign a multi-year contract, we can sell the machine only at a 50% margin. Our recurring revenue will occur through the whole bean packets. It's a 40% margin, so we have a working model provided by data, or with data given to us by owners. So each room will generate 532 packets. So in 1,000 rooms, that'll be worth a little over $1 million over the 3-year period, and the profit of $428,000. The patents, we've already filed a patent in January 23. The design patent was filed in June of 24, and multiple trademarks have been awarded to us. My team is what gives me confidence we'll make it to the finish line. I myself am an experienced entrepreneur. I started my first company when I was 19, hired my first employee when I was 24, and we're bringing in $100,000 a month by the time I was 25. Tim Denny is an experienced operator as well as leading R&D divisions. He has over 30 years leading tech companies and significant startup experience. Scott McMartin was the global director of quality for Starbucks. So he worked directly with Howard Schultz, and he has imported over 1 billion pounds of coffee into the US. Craig Rosengrantz is one of our strategic advisors. He's had over 30 years of founding companies with multiple successful exits. Jamie Ogle is also another strategic advisor, significant experience leading companies and managing, and he's the owner of North Texas Pella. Our go-to market strategy is focused, so we're going to be starting with hotels pilots in March. So we already have 10 lined up. They're going to be 1 week apiece. The end goal for us is capturing guest surveys and POs. We're going to be doing small runs in August of 25. And then our hotel beta launch happens in October of 25. So we're going to be starting with 10 hotels, totaling 1,000 rooms, and expanding from there. So our goal is to target 15,000 hotel rooms next year. Our revenue target is 600,000 this year, with next year scaling up to 6 million. So our margins are going to be 22% with a 44% margin projected for 26. Our 5-year revenue, so this year will be the 600,000. We're mostly focused still on just getting us through product development. And 29, we plan to hit the 60 million with a $31 million profit. And this is just fun. This is on the consumer side. So as we expand to consumers, we already have this lined up. So it's a Keurig buyback program. So the goal is to eliminate 1 billion plastic pods. We plan to incentivize consumers to recycle their Keurig machines from households. So we actually already have secured the electronic recycler who can recycle their Keurigs. And in exchange for them, the consumer to recycle their Keurig, we're going to give them a $30 gift card. We anticipate quite a bit of buzz around this marketing idea. Investment so far, so founders have put in 400,000, friends and family have put 430,000, and angels have put in 130,000. So we're at a convertible note at an $8 million cap, and mostly allotted to the product development. So we need tooling and then the additional engineering time to get us to the finish line. It's cut off a little bit, but the next round will be a $1.5 million raise later this year at a $15 million cap. We will have POs and revenue with the next raise. So imagine waking up to the smell of freshly ground coffee with no pod waste to the environment. Join me to make this possible. Thank you.
Should I go ahead and start with the comments?
Yes, Jean, we can't hear you. You're muted. Yes, please.
Okay.
I'm sorry. Yes, Adriana, I was muted myself.
Yeah, I was a little confused. Okay. Very, very clear, creative idea. It seems to me that the value prop is based on two things: better coffee and the sustainability story. One of the concerns I would have, as we currently see a trend towards not focus as much on sustainability, I would think that your deck needs to put a bigger effort on making the value prop around why this is better for the hotels. At the same time, we are seeing hotels that tend to be, even the luxury hotels, that are not spending as much and trying to cut back on some of the perks that we used to get. Having said all that, I think you do have a really good goal, a good mission, and definitely looks like a very experienced team and the right team to make this happen. A couple of suggestions for adding information in the deck, and a comment I'll make around the margin. Seems a little bit low for what the product is, based on some other companies that we get to see in the coffee space. The exit, you didn't talk much about here, but you do. I hope you can expand on that. And the sales approach. I know it's very time consuming to go and knock on the door of entities like the Hilton Group. So how are you going to deliver the sales numbers, which are pretty aggressive, knowing that the sales cycles are lengthy?
Sure. So your question, I think the only question that I heard was about the sales, and then everything.
Yeah, I'm suggesting that you expand on that and you expand on the exit strategy.
Oh, sure. Yeah, I agree with you. The 7 minutes was tight. I lost that slide, but I can bring that back in. We are planning on doing a selling at least 51% within the next 6 years. And then as far as sales, so talking to the size of companies that we're already talking to, they own or manage tens of thousands of rooms. So the one like Curator, they manage 25,000 rooms. Hilton, of course, manages hundreds of thousands. And then tomorrow I'm meeting with someone who founded Aimbridge, which is 171,000. So talking to actually only a few groups, we can easily kind of scale a lot, much faster than only talking to one group at a time or one hotel at a time. I didn't realize how consolidated the hospitality industry is.
That's our time.
Okay.
You will
Thank
be
you.
able to continue with Adriana later by showing your materials to her. And we're now looking for Dale and Bondi Bourne. And you can share your screen, Dale, and also say something so that you appear, you're muted. No, that's Naomi that's muted. Let's see here. Dale, where's Dale? Dale, yeah, Dale, you're still muted. So if you can unmute yourself.
Sorry.
Okay, we're ready.
Oops,
And
hang on.
let me know when you want me to start. And you want to share your screen and get that up?
Yeah,
And
I'll just
and
go
then
back
when
to
you're
that now. Yeah,
and when you're ready, I'll start your timer.
okay.
Okay, I've got your screen and you want me to
We're all
start?
ready to go? Great.
Okay, starting.
Okay, excellent. Well, good morning, everyone. My name's Dale McCarthy, and I'm the founder and CEO of Bondi Bourne, Australia's leading luxury swim and resort wear brand. And today I'd like to share with you why Bondi Bourne is such an amazing investment opportunity, and we're both going to make a lot of money. The problem that we're solving is that most women feel very, very vulnerable when they are wearing their swimsuit in public. There's a lot of pressure from society to look good. And actually, most women hate buying swimwear because it's a very confronting experience because most suits do nothing to deal with the problem. So the solution that sorry, my screen's frozen. Come on. PowerPoint, don't you love it?
I paused you for a moment, so.
Thank you. Sorry. I've got the wheel of death.
We got a little spinning
There we go.
beach ball.
There we go. There we go. Yeah. Okay.
Shall I resume?
You may resume. Thank you.
Okay.
So Bondi Bourne is the ultimate in body confidence. I literally spent 3 years in research and design. I learned everything there is to know about how to create the world's best swimsuit. And what I learned was, above everything else, the most important factor is the fabric, and it can do wonderful things on a woman's body. I visited the world's best stretch mills, and in Italy, I found these 3 technically advanced fabrics. We've now trademarked them, and we've employed them to create over 200 unique swimsuit patterns that our customers can't get enough of. But don't take my word for it. We've got our customers tell us all the time how superior our product is to everything else on the market. Fiona G said, "I'm compelled to write to you and congratulate you on an amazing achievement. These are the best swimsuits I've ever worn, and I've tried a lot of expensive international and exclusive ones." Even Selma Hayek, who's married to the CEO of Gucci, chooses to wear Bondi Bourne. It's a huge market. Luxury swimwear is around $1.2 billion in the US alone, which is our target. And vacation clothes have also become a very big business. People are increasingly seeking outfits to enhance their travel experience. And I'd like to thank Gwyneth Paltrow for choosing to wear Bondi Bourne for this slide. So since 2020, we've been making both swim and resort wear. So how do we make money? Currently, 2 ways. We sell directly to consumers through our global websites, and with wholesale through a global agent to department stores and luxury online retailers. We have a best-in-class website. Here's our beautiful homepage. And here's a map of all our customers currently in the US. So we're pretty much everywhere in the US, but California is our largest market, followed by New York and Florida. We have superb e-commerce metrics. I'm a digital marketer, that's my background. In the past 5 years, we've spent about, not a lot, $100,000 to $200,000 per year advertising on Meta to acquire new customers. Our average cost of acquisition has been $80. And over the last 3 years, our customer lifetime value is $720. These are metrics that every e-commerce brand would kill for. We've acquired 20,000 customers over the past 5 years with minimal spend. With growth capital, the world is our oyster. From a wholesale point of view, we've achieved quite significant success. We're now stocked by the who's who of luxury retail, evidenced by the logos here. It's literally quite unprecedented for a young brand to get into these prestigious retailers. It's unheard of. It speaks to the iconic appeal of the Bondi Born brand and the superiority of our product. Libby from Net-a-Porter said Bondi Born has quickly become one of the leading names in luxury swim and resort wear, and Motor Operandi called us Australia's leading swimwear label. Thank you, ladies. The boutiques, we're not yet in boutiques. We haven't tapped this market because our current agent doesn't sell to them. But 85% of in-store women's fashion sales occur through 200,000 US boutiques at 30 billion a year. Let's say premium stores at 2% of that, or 4,000 boutiques. If we acquired only 5% of those, 200 stores, we'd add $8 million revenue per year to our line. It's a huge opportunity, and we haven't tapped into it yet. And we intend to recruit commission-based agents to sell door-to-door to key boutiques in regions like the Hamptons, LA, etc. We have a highly experienced team. I've got over 30 years building brands and in digital marketing. I've built numerous digital businesses within Australia's leading media company, Fairfax, one of which recently floated is now worth over $1 billion. Natalia, our creative director, is extremely talented. She won Australian Women's Wear Designer of the Year, and she holds options in the company. Coney, our head of production, has 17 years experience making collections for large fashion houses. Iona has 11 years building luxury brands, including names like Victoria Beckham, and Vicky has spent 11 years in global logistics for brands like Fendi and Prada. So our forecast is as follows. In 2024, we did 2.4 million in revenue, and we're profitable. With growth capital, we plan to focus on acquiring new e-commerce customers and expanding into boutiques. This will see us easily hitting 50 million revenue by 2029. In 2025, we'll start implementing these growth plans and deploying the capital, which will set us up for significant growth and profitability in 2026. Since inception, I've put in $1.4 million. I've raised $550K from family and friends and $1.8 million from angel investors. As I said, we're now profitable. So this $2 million round is to be spent in growth in tranches. So the way we're going to employ the capital is on acquiring e-commerce customers to building brand awareness, acquiring boutiques. We're going to extend our range further into trans-seasonal apparel and accessories that people take on holidays, and staff to execute this plan. I'm in DD at the moment with Keiretsu Northwest, and we're about to raise between 250 and 500 to get us started. The good news is for our investors is that luxury swimwear is a highly active M&A sector. Pretty much
you got 3 minutes left.
No problem. I'm going to kill that. Pretty much all of our major competitors, the global luxury brands out there, have already been acquired by private equity or a fashion house. The boxes along the top list our competitors, and the names underneath is who acquired them. And one Australian swim and resort wear brand, Zimmermann, sold in 2023 at a 1.5 billion valuation. Our plan is to exit in 5 years with at least 10 times our current valuation, which will make me, my team, and my lucky shareholders very happy indeed. So please contact me. I look forward to telling you more about why Bondi Born is such a unique brand that's destined to become a major global player, and how our investors and I are going to make a great deal of money as a result. Thank you.
Very, very good presentation. Adriana, you got 2 minutes.
Yeah, well, you already said what I was going to start by saying. Excellent presentation.
Thank you.
But knowing that we only have a couple of minutes and maybe not even that, one of the things I would encourage you to elaborate a little bit more is we typically ask the question, you've been selling for 5 years, and I know you probably started with very few customers, but how often do they come back to buy more? That's an important metric for us when we do because this is a very, very competitive market, as you know. And the other thing, it's just a thought and suggestion. I don't know what's special about the fabric and the technology, but if you could pitch what else you could do with that, which is a lot of your IP or something that's different. So you come across as very different from those who are just focused on selling the product. You have more than that. What are the other applications of that fabric? Is it more lingerie or whatever else might be out there that would your fabric would be applicable to?
Yeah.
And I know we don't have time, but I'm happy to chat offline.
Okay, thank you. In answer to your first question, which was
fabric.
Oh no, the first question wasn't fabric. The first one was I can't remember now. Anyway, I'll talk about the fabric. So yeah, so each of these
the recurrence.
Recurring. Thank you very much. We have an amazing return customer rate. Every year it's ticking up a few percent. At the moment, it's hovering around 38%. So every year of people that purchase from us, 38% have purchased before. So our customer retention rate is excellent. And I haven't, because I've sort of been running on a bit of a shoestring budget, I haven't even deployed a lot of the techniques and tactics I want to do around customer loyalty, like setting up a loyalty program, really doing targeted direct mail. Like, you bought this beautiful blue swimsuit, and here's our beautiful blue skirt that goes with it. There's a lot of things we can do to improve that retention, but already it's very strong with very little effort. So on the fabrics, so yes, each of them has sort of a unique weaving technology, and they perform differently on the woman's body depending on her need. So for women who've got larger busts or want to have tummy problems, our sculpture is our biggest selling, best-selling fabric. It has a tension technology, a 3D tension technology that holds everything in and smooths you without being like you're wearing a corset. It's very comfortable. So that's sort of our best seller, because women go, oh my God, I actually look fabulous in this, thank you. As well as the construction techniques that we use with underwire and things. In Australia, where we make this, we design everything, we have a very strong swim culture. There's a lot of pattern makers and experts in swimwear, which makes our job a little easier. And the other fabrics, Singular is a single layer that's a bit thicker, but it moves with the body like a second skin. And women who are very active love that fabric. So you're very right, Adriana. We're very different from other swim brands that just go, here's sexy girl on the beach, and you can look like this. Well, you probably can't. We talk all the time about our fabrics, the fact they're trademarked and what they do and how they perform on your body. And that is definitely a key point of difference and a very rich area from a marketing point of view to talk about.
Going on that last sentence was emphasize that a little more, so you don't come across as one of many that pitch to investors.
Okay, great. Okay, thank you.
Okay, thank you. Very, very nice.
I want to mention one thing about Bondi. They in their Keiretsu pitch, that one of the people that is involved in that is a Tech Coast Angel member, already knows about this deal. And secondly, Dale is expressed interest and is willing to come to the States for meetings with the investors, which she did in Seattle and she'll do in Los Angeles.
Yeah, I mean, it's a quick 13-hour trip from Sydney to LA. So yeah, and I really would, I think California is our biggest market. It's a great opportunity to build some connections and investors in that state. It'd be awesome.
Great, thank you so much.
No worries.
And we're going on now to Andy Westmoreland, and I am going to be running the PowerPoint for Andy. He is in Texas right now and knows.
Hello,
Texans.
everybody.
This is Andy Westmoreland with Permian Petroleum. And Andy,
Hi guys, how's everybody doing today? I hope I was watching all the presentations. They look great. I'm 35 years in the oil and gas business, and what I'm doing right now is a simple no drilling risk prospect. I have 425 acres in the Permian Basin, and basically I am selling 40% of the project for $1,240,000. Long story short, you can buy 1% for $24,000 or buy the whole 40%. Anyway, long story short, we've got existing production and we have behind pipe reserves. Let me tell you what those are. First of all, the reason this is available is in the beginning of 24, the big storms in West Texas took out all of my electric. So in order to bring this back into production, I am selling my interest. The big thing about it is we will get production back. There's should do about 35 barrels a day on the daily production. And then what we've learned since we had the wells went down is that we have behind pipe reserves. Those behind pipe reserves could put the wells into production. You can go to the next slide.
Okay.
You can put this stuff into production, and at the end of the day, at 200 barrels a day, you're talking somewhere in the neighborhood of $5 million a year. And so a $1.5 million would be about the 40%. So you're looking 12 to 14-month payout, depending on price. My calculations are at $70. Having said that, you can go to the next slide. Here's a breakdown of how the interest works. 25% of the net revenue interest goes to the landowner. 45% goes to me, and 30% goes to the investors that get involved and put it there. You can go to the next slide, please. Big investment. The whole investment is 100% tax deductible against active income. So if you were the one investor that wrote the check for $1,240,000, you'd get 100% against your active income. You'll take about 80% of it this year, carry the other 20% over a 5 to 7 year period. Plus, you'll benefit from the monthly income. So you could see your cash back in 12 months. The exciting part about all of this, there's no drilling risk. None at all. So the second part that's good about this is everybody talked about exit strategies. There is a second tier that you can actually go out and drill some wells because it's a proven PUD. Being that I only have 7 minutes, I'd be happy to answer everybody's questions on PDP, PDNP, and what PUDs are. But that's the definition of proven reserves. So we could go on the second tier and actually raise more money and drill some more wells. And if we were to go drill 1 or 2 wells, it'd cost another, give or take, 900,000 each, $1.8 million. Drill 2 wells, you could probably turn around and flip this for 10, 12 times its daily production. So you're looking at 2, 4, you're probably talking $4 million, and you can probably flip it for 8 times that on the daily productions, because the wells will produce. It's just that simple. I would love to make it hard, but I know most people want to know, well, it's oil and gas, you can drill dry holes. Not where we are. We're not drilling. We're just putting it back into production, and we're going to go get reserves behind pipe. They're proven. They're producing in the field where we are, and it's just a simple, straight up, how much income do you want to make? It's going to produce. That's the only thing I don't know is how much actually it will do. But historically in the field, calculations from what it's done around us, 200 barrels a day is a reasonable daily production.
Now, Andy, I must tell everybody that you're actually my client.
That's fine.
And Mark is going to comment on your deal, but let me say to everyone, this is a revenue share. And it is a revenue share of wells that are already exist, that had a storm that tore down a bunch of stuff. And so the money would be used to restore the wells that are operating and to tap the wells that have already produced. So you're looking at a revenue share of something that already exists rather than going out and drilling a few dry holes. That's a huge difference with this type of offering. And so, and you're going to get a share of the revenue, and the revenue with this particular oil and gas deal is really hard to beat based on the research that I've done. And I'm going to turn it over to Mark and let him make some comments.
Can you hear me?
Yes,
I can hear you.
Okay, fine. So, first of all, the presentation is interesting. It's a little bit of a special case because actually what is presented by Permian is something that should raise more money in order to be safe. So let me explain to you where I come from. When you have this kind of operation that lives on a limited budget, the risk can be high because basically what Andy did, obviously, is restrict as much as possible the amount that he needed, and he offered a quite generous counterpart for it.
Mark, let me address that. We're trying to do a Reg CF, and the limit without a certified audit is 1.24 million. Now, Andy has got another deal that will tie into this one, called the Woodbine project, which will use millions to do, and they will drill some wells. This is kind of an introduction, and he's testing the Reg CF type of offering to see how well it works to raise capital. That's what he's actually doing here. But yes, you're absolutely
Jim,
right.
You're a wonderful defender of your client. But what was presented today was the Permian Petroleum, and we didn't see anything else.
Right.
So without doing this, what I think is that it's a big risk. So the point is the following: what I would do in a case like that is use a model we developed called the perpetual corporation. So let me explain to you how that works. We would basically raise $5 or $10 million, and we invest that money not in the operation directly, but in a fixed income source, for example, real estate, that generates, in this case, about 10 to 12%. And what we do is we put that money as to 10 to 12% into the operation that Permian is looking at. So if, for example, it's an amount, I'm just giving the example of 10 million that is raised, basically this amount of 10 million is protected by that. And there is a website that I developed called perpetualcorporation.co, which will give the whole explanation about the operation. What happens is that in that particular case, it seems to me very appropriate because on such a revenue share, anything that happens can damage the income, and anything that happens can basically compromise the return on investment for the client. Even though, as you said, it's rightly pointed out, it's a revenue share, and probably everything will happen without problem. But I would love to see some caution of safety, and that safety can only be organized by raising more money and basically protecting the capital.
You know, Mark, since he's one of the biggest investors here, Andy, and Mark, I happen to know Mark very well, we should present him with your other deal as well, with the Woodbine project, and have him discuss further with you.
I like Mark's attitude. The only problem is doing oil and gas and recreating it so that it has the safety feature. You will not get the tax advantages to it.
Yes,
his stru-
you can. Yes, you can maintain them. Just ask. Just one thing. Which city are you based out?
I'm in Rockwall, Texas.
Rockwell. Is it far from Houston?
Not at all.
Okay. So I'll give you a name of the thing of my partner in Houston who has done like many deals of oil and gas, and he probably will be able to help you.
Okay.
Terrific, terrific. Well, we can continue this offline,
Sure.
and we will. This is one of the better ones, David, that we've seen. You know, these are excellent deals today, really excellent, all of them. And we want to thank everybody for participating today. And David, did you want to say anything in closing?
Yes, sir. We had some excellent presentations. My compliments to all of you and to our angel investors and the people that commented. I thought their interactions were excellent. Our next conference is on May 1. We're going to celebrate May Day. And the website will be open for, let's say, February 15, right after your Valentine's Day celebration. So those of you that are online that are considering possible presentations for May 1st should come on about February 15 and submit your deals. We can work with you and we can start to generate investment interest before the conference. We've actually done some of that. And of course, we work after the conference. And the deals that were presented today will be sent out to investors that were not here. We have probably represented by our 15, 16 organizations, I would say by now, well over 1,000 individuals. And one thing they have in common, they're all investors. It's amazing. The amount of money represented by this is just, beyond consideration. So those of you interested in May 1, come on about February 15, submit your deal, and we'll work with you. And for those of you that presented today, of course, we're going to send your stuff out and you're going to get even more content and more interest than we had today. So thanks to both of you on both sides of the equation. And Gene, thank you for keeping us sort of on schedule and for your own comments.
Yes, sir. We thank you very much, David, and we'll see you, all of you, again soon. And thank you so much. And there will be a recording, and you will all get a link to it. So, and you can use your piece to promote some more. So thank you all. Bye-bye for now.